Good morning, everyone, and welcome to the Fortem Wealth and Castile Resources webinar presented by Jackson Securities. I'm Aidan Lane. I'm one of the investment managers here at Fortem, and I'm here with Mark Hepburn from Castile. How are you today, Mark?
Yeah, going well. Thanks, Aidan.
That's good. So today's webinar will have a presentation by Mark. I'll then ask Mark some questions. From there, we'll take live questions from the floor. You can see on the bottom right-hand side of your screen, there's the opportunity for you to ask questions there. I will endeavour to answer as many as possible, but apologies if we can't get around to all of them. Mark, I'll hand over to you now for the presentation.
Thanks, Aidan, and thank you everyone for joining the webinar this morning. And hopefully, if this is the first time you've seen Castile, the idea of this presentation is to give you a really good look at where we are at, any sort of historical things that you need to discuss. Obviously, you can ask in your questions, but I'll get through this in sort of 10 to 12 minutes, and we'll go to questions. So just to go into the next slide, and then the one after, we listed in February 2020, and we raised $20 million because really Castile is a pre-development company rather than an exploration company. As you can see, that's where we are at now. We have 200 million shares on issue. 100 million of those shares were issued in an in-specie to Westgold shareholders in an in-specie distribution. The other 100 million we sold for 20 cents. Market's come off a bit since this presentation. Obviously, we're around 21, 22 today. But as of 1st of March, we had 13.5 million in cash. And we began our program pretty much around that time because we can only drill up there in the dry season. We began the 2021 program at the end of March. So we had a couple of rigs up there, one big rig, one small rig. The small rig has done the bulk of the shallow drilling. The big rig has done, obviously, sticking to some of the deeper drilling we've got. And now we're moving into the next phase of the program, which will include clean-outs of holes and some downhole EM and then some true exploration. The bulk of what we have done already is just a resource definition on our flagship asset, which is the Rover 1 project, which is located, as you can see, pretty much centrally in the Northern Territory there. So what I'll go through today is what we've done on the Rover project, because we're in the middle of a pre-feasibility, which this current drilling is adding to. And we're also looking at some regional exploration on targets that have existing resources. So it's not greenfields, there's some established resources there, and we're looking for pretty specific targets. So we'll just go to the next slide. So this is where we're located. We're about 75 kilometres southwest of Tennant Creek. We have use of the commercial airport, the Stewart Highway. You see there is about 56 kilometres as the crow flies from the Rover project, which is in the centre of your screen there. The lime green area is this tenement package, which is the entire Rover mineral field, which we'll have a little bit of a look at, both from a Rover point of view and also a wider exploration, as I said, regional program. We have the Amadeus natural gas pipeline flowing by, as you see there, and we have the railway Adelaide to Darwin, which we intend to make use of for our concentrate, which I'll run through as we go along. So you can see where we are, and if just flick to the next section there, Aidan, and you'll see what comes up. Explorer 108 already has 12 million tonnes of lead and zinc there. You can see those grades 3 and 2, but that's quite a large resource already. Explorer 142 has 180,000 tonnes of 5.2% copper, and as Aidan flicks to the next couple, you can see up there to the northeast. We've got the Rover 1 there, which is our flagship asset, which I'll cover. You can see there's 7 million tonnes at 1.75 grams gold, 1.2% copper. And then you've got Rover 3, which is another anomaly that we'll be drilling in this year's program. So we've got quite a busy program. The furthest we'll be drilling away, and you can see how we're trying to develop a hub style with what we're doing and where we're drilling. Anything that we find, or all of these prospects that you're looking at, can be processed at a central hub location. And just keep that in mind as we're going through the presentation, because obviously that's one of our goals, to begin their operations with Rover, but with continued success at these regional plays, we'll be able to expand the operation. So moving to the next slide. So you can see historically, this is some of the drilling that's occurred here. This is what they call an IOCG, or an iron oxide copper gold formation, very typical of the Tennant Creek area. And you can see on the left-hand side of your screen those high-grade gold intercepts, and on the right you can see the high-grade copper intercepts. In the middle, you can see the drilling and the drilling strings from what has already taken place. You can also see the mining engineering and design that we have already done for the pre-feasibility study. Obviously, we'll be feeding this year's programs, results from this year's drilling program into that study, and attempting to add to what we have there with regard to our inventory of both gold and copper. And I'll show you what that actually looks like in a simplistic cross-section shortly. But you can sort of see where we're at. We've got a lot of previous information. There's already been a scoping study done on this project, and we're using the data from that. We are now going through the process ourselves with all of the environmentals, the metallurgy, hydrology, the reports that you need to as part of a pre-feasibility study. And as I said, we'll be hoping to complete that once this drilling is fed in September, October this year, and then obviously get moving straight into full feasibility study. So I guess the other thing is there are byproducts involved here, cobalt, bismuth, you've got silver, and there is potential also for a coal washing magnetite product, which sells for about 550 Australian dollars a tonne landed in India. And that's a product we'll be able to look at developing simply from our waste. So it's going to be a very environmentally sound project as well, and I'll talk to that as we work our way through. Just on to the next slide. Okay, so last year in 2020, we weren't able to get out and start our drilling program until late August, early September. In that time, we obviously we're looking to target some of the areas that we felt we needed to know more about. So the first hole we put in the ground was in late August. Results came out in October last year, but it was arguably, to me, one of the best holes drilled in Australia last year. Returned 30 metres at 36 grams and 1.5% copper. But more importantly, and this is the upside surprise that you want, it's across a broader zone that had originally been interpreted by previous drilling. You can see in the diagram on the right, the initial, if you like, a concept or interpretation of where the gold zone was, is that those orange figures that you see there. And you can see how just simply by drilling this hole, and I mean, this is a great result, but you can see how it's broadened those zones for us. And they, if you like, in the red highlighted areas there. So they're new inventory to what we'll be talking about with our resource and our reserve coming up when it comes out later in the year. We're able to broaden those zones and obviously expand what we're looking at with regard to our mineralisation. That was the most pleasing thing. On top of that, of course, you've got, this is the best hole ever drilled at Rover. And you saw some of those results previously. They were very high grade, but just the true width of this thing, it was around about 27 metres. It was just an exceptional hole, and really has ignited and changed some of the ways that we're thinking of looking at this particular project. So if you go to the next slide there, Aidan. Okay, there we go. So the 2021 program's already started, as I said, late March, early April this year. And we've put out some results last week that really showed what we're trying to do here with this resource definition drilling. You can see there again in those interpreted zones where you've got the copper zones and on the left-hand side and the gold zones on the right-hand side. You can see how those red highlighted areas where we've really had interpreted no real mineralisation, where they're open to and what they've added to our inventory. And you can see some of those numbers, you know, they're sort of, and we're looking at these copper zones, you know, you see 19.6 metres at 1.7% copper, and then you throw in the gold there, 17 metres at 6.5 grams. It really is adding to the edges, if you like, of what the inventory will finally be here. On the right-hand side, you see the gold interpretation. and obviously it's quite a similar figure, but for the same hole, but you can see what it's added as far as the gold goes as well. And now we've got these areas open, as you see, if you like, at lower levels, and we can try and define where those boundaries are and see what we can get into our inventory. But 2021 drilling continues. There'll be more holes like this, trying to understand some of the boundaries of the high grade zones, and also where these gold and copper zones begin and end. Typically, they are within the banded ironstone, which you can see represented there in the diagram. The gold gathers around the lower ends of the ironstone, and the copper tends to be at the higher levels. That's a bit of a generalisation, but that's sort of, as you can see, that's what happens in the diagram there. That is pretty consistent throughout the deposit. So you can see it's already been a good year for us in adding to those areas of mineralisation. On the next slide, thanks. Just quickly, this is again highlights some of the engineering work we've already done. On the left-hand side, you can see where those resource definition holes are going to go during this year in this program. 6 parent holes are planned with 11 daughter holes. And just quickly on the right-hand side, you can see our engineers' work has already begun. You can see it in the plan view there. You're basically seeing a representation of how the mining design or the mine design has come about from the plan. You can see the spirals, etc. You might be able to make out the thin line heading off to the north in a north-northeasterly direction. It's going to be a straight decline of about 2.6 kilometres on a 7-to-1 ratio to get down the decline. But you can see our exploration camp there in the bottom right also. But you can see that is the work planned, and you can see it's pretty thorough examination of what's going on in the Jupiter and also in the Jupiter Deeps. And just to go quickly to the next slide, Aidan. You can see the current concept there is that the mineralisation we had assumed connected between Jupiter and Jupiter Deeps. This is from previous drilling and previous information. We also had these outlying holes at depth, and they were about 1,000 metres. Obviously, we wanted to have a look down there to see how far it goes. But the great thing was the gold mineralisation continued down there, and you can see 15 metres at 6 and 20 metres at 3.2 with some copper associated. So we obviously knew the mineralisation continued. We thought this might just be another lens to the east if you look at those Ganymede intercepts. But if you flick through the next through there, Aidan, you can see that in actual fact, you can even see it in this very basic diagram. Keep going there, Aidan. You can see that in actual fact, it might be that the case is that the link is here. Keep going, Aidan. And you can actually make out that we've actually got, we've had no drilling in the section between there. We've had no drilling in the section between the Jupiter Deeps and the Ganymede holes. It's just taking a while for this to load. Keep flicking through there, Aidan. Again. There are a few ads on this one. So you can see what's happened there. There's obviously now an extremely strong case to have a look at what's happening in between Jupiter West and Jupiter Deeps, and also in between the Deeps and these Ganymede intercepts. And if that lines up, again, you're looking at more mineralisation closer to surface and adding to our inventory. So that is actually more or less an exploration play within what's going on in the wider resource definition drilling. So just to go to the next one, flick through the next slide, Aidan. There you go. You can see where we're going to put those 2 holes there to test this theory. And, you know, considering that this asset has been had a fair bit of work done on it, it's interesting to come up with this now. And that simply came about from our drilling last year. So we're pretty excited about this and what this could turn into with regard to the actual resource itself. Okay, now that is where we'll, if you like, briefly close the book on Rover 1. That is our flagship asset. That is the asset we're developing. It's in a pre-feasibility study underway and resource definition drilling underway. What I'm going to talk about now is the wider regional exploration, where there, as I said, we do have some initial resources, but we also have a lot of work already previously done with regard to electromagnetics. So on to the next slide. Okay, if you want to flick through here, we've talked about Explorer 108 out to the west. That'll come up, Aidan, if you keep flicking through there. So there's Explorer 108 out to the west. Now, we'll be looking for a huge primary copper target out there, and I'll explain why and what that looks like. Explorer 142, we already have that high-grade copper, 180,000 tonnes at 5%. Rover 1, I mean, we've talked about that. And then up to the north-northeast of Rover 1, on the next flick, I think, we've got Rover 3, which is also a high-grade gold and copper prospect. So Explorer 142 and Rover 3, we expect to look exactly like Rover 1, and that will just simply add more feed into the processing plant and add years to the project. Explorer 108 will also be able to go through the second section, or the flotation section of our plant. But what we are looking for there the exploration target out here is very, very much larger, if you like, in quantum to what we are looking for with these other regional plays. So just to flick through there, Aidan, we'll go to Explorer 108 first. This is 35 kilometres from Rover 1. On the right-hand side, you have Mount Isa represented, if you like, in section there. And on the left, you have what we have already found. The blue section on the right is the lead and zinc at Mount Isa, which they began mining in the 30s. The copper is represented in the brown and yellow underneath, which they found in about the 50s and have been at times producing up to 100,000 tonnes of copper blister per annum from Mount Isa. This is one of the great mines of the world. In Explorer 108, is exactly the same geological setting. Mount Isa is about 600 kilometres to the east. Exactly the same time as far as the stratigraphy goes, exactly the same geological setting. The host rocks are the same. The lead zinc cap, if you like, is exactly the same and similar types of quantum. So and we found two geophysical anomalies beneath the lead and the zinc, which we are hoping represents the primary copper source. In the diagram on the left, the green areas you're looking at are two copper feeder zones. And on the top, the green area is like a copper blanket which sits over and around this lead zinc structure. And on the right-hand side, you'll notice there's 5.7 million tonnes at about 0.4% copper. That's what's represented by those green zones, but it is not the primary copper source. These feeder zones are getting copper from somewhere, and we've found two large geophysical anomalies that we're going to test. We're going to clean out two of these holes, run EM down those holes, and then drill for the large primary copper source target. And you can see by the quantum there, it's basically, hopefully, what we're drilling for is the same size again. But again, this is exploration, and I'm very keen to get down there and have a look at those two anomalies that we've found, both with EM and then with a dedicated exploration hole. Very excited about this one. This is a massive copper target for us. Next slide. What I've done here is I've put Explorer 142 on the left-hand side and Rover 1 on the right, just to simply show that as far as a geophysical anomaly goes, they're practically the same size. So you can see the amount of drilling that has occurred on Rover 1 represented there on the right-hand side, with the green areas, obviously, for the copper, and the golden areas for the gold zones. So if you look to the left on Explorer 142, we've already discovered one of the copper zones. We're now going to look for the gold zones and increase our knowledge of what's down there from with the copper zones as well. Now, this is about 30 kilometres from Rover 1. And if we can prove this up and get it up to where Rover 1 is, obviously we've simply added years to another ore source for us to feed through the same plant. This is, again, looking for a very typical IOCG. The grey areas being the magnetite we know are there. It's just a matter of now finding these golden areas, or gold caps. And so with plenty of copper there already, if we can find these gold caps, we can turn it into another Rover 1. Next slide, please. Okay, so 15 kilometres to north-northeast of Rover 1 is Rover 3, and we're looking for basically, again, exactly the same thing again. There was a hole, if you look on the left, there was a hole drilled into that, if you like, that rectangle there that represented what they thought was the mineralised zone. If you go now to our interpretation that we've had done by Newexco, studying the EM, they now think, very similar to Rover 1, that there are different sections of this ore body. The anomaly, again, they like it as much as they did back in 2008, but they think that the hole that they drilled went straight through the middle of the mineralisation. So what we're going to do is clean the hole out, run some EM down there, and then find our own exploration target. But you can see where we've interpreted those mineralised zones. Again, 15 kilometres away, IOCG can feed straight through our plant, hopefully adds to our years of inventory. Okay. If we go to the next slide there. That pretty much winds up where we're coming from an exploration point of view as far as the program goes. I'll just take a minute to run through who's running the company. Peter Cook is the executive chairman of Westgold, and he'll become non-executive chairman of Westgold. I think it was announced the last couple of days. You know, that's $1 billion gold mining company that I'm sure you've all heard of. My background is 30 years in finance and then running companies. I'm involved as a non-executive director of Firefinch, and was a stand-in interim CEO there for a while. John Braham's head of resource finance at Macquarie Bank. Jake Russell works at Westgold as Peter Cook's head of exploration. Michael Page is just the mining engineer that is running our PFS study, works full-time with us here. And Mark Savage is our geology manager up on site in the Northern Territory. We've also got a guy called Steve Russell as a geologist for us who worked for Emerson in Tennant Creek for 8 years. So he has vast experience of the area and the geology that we're currently exploring. So just as a quick recap on the next page, we had a great 2020 season as we hit one of the best holes we've seen in Australia last year. We're working very hard this year to now get our resource definition drilling done and sorting out exactly where the high grade areas of this ore body are, because they will be 80%, if you like, of the pay from this deposit. We're looking to double up, triple up potentially with 142 and Rover 3, and we're going after one of the biggest copper targets in Australia this year, no doubt about it, at Explore 108. So we're very busy, and as I say, we're pretty much from the start of when those results came out till sort of end of September, depending on how the program goes, you'll be seeing these results. So we're very well funded, strong board management, and we're getting stuck into these targets. So really that's about it, Aidan, unless there's some questions that you want to go to.
Yeah, no, thank you for that, Mark. We'll take some. I'll take some of my questions now. Then we'll do some of the questions emailed into me, and then we'll take the live questions from the floor. So I firstly just ask: are you being affected by the labour shortage at all with your exploration endeavours?
For us, it's really been about. There's certainly a shortage now of rigs, and that would be Australia-wide. And I guess it's more so the contractors that we've got in there are struggling to get people from a rigs point of view. That's from as far as we go with our assays, it's not too bad. We're now using an assay lab in Pine Creek, which is about 600 kilometres away. Our turnarounds are a week to 10 days. Towards the end of last year, we were using Bureau Veritas down in Adelaide, and that was pushing out to really 17, 18 days, which towards the end of the year, obviously things got a lot busier as money became a lot more available to exploration companies. But all in all, not too bad. We've got, I guess, a local workforce in Northern Territory and Tennant Creek, which has served us very well. We don't need a lot of people, but it really hasn't bitten us yet. But I think things are only going to get busier. So we've just got to make sure that we're organised on the ground and getting done what we need to do.
Yeah, well, that's good to hear. And obviously a lot of other companies in the exact same situation as you. But it's good to see that you're on top of it and well aware of the situation.
Yep.
Moving to the next question. So why as a company have you started the pre-feasibility study whilst also continuing to explore your other projects at the same time?
Well, I think the important thing for us was that we raised $20 million to start things off really as a pre-development company, not necessarily as well as, I guess, having the opportunity to do this exploration as well. And that was the plan from the start, given how much work had been done on Rover 1. There was already a scoping study. There was already a massive resource there in gold and copper. The job really was to optimise it with this pre-feasibility study, and that's why we've got an engineer working full-time on it here, optimise it, have a really good understanding of it. The background with Peter Cook has a 10-year history with this asset. He's obviously our chairman, as does Jake Russell, having owned it at Metals X. So it really was a continuation of the pre-development cycle for Rover 1. but also getting back out to these other regional plays with dedicated funds.
Okay, and I might just quickly jump to a live question that relates to this a little bit. So someone just asked, with all the projects that you have, how do you decide where to allocate resources?
It's more or less for us, it's about, I guess the push for us is to prioritise where we think we can add the most value. Obviously, when you look at those regional plays, as good as 142 and Rover 3 are, given the copper price has gone from $2 to like $4.50 now, but had a little look at $5 a pound, we have to go and look at 108, and that becomes a priority with regard to which if you like resource or regional play that we hit as a priority. But it does change. Obviously, and gold is still good. That's the thing. But for us, it comes down to what makes the most sense. But if we go and find this massive copper target out at 108, it is a quantum change to this company, no doubt about it. That's how we generally go in our planning. And the good thing is being small, we're flexible as well.
Okay, no, thank you for answering that. I'll just move to the next question from me. So how often throughout this year would you look to push out results?
I guess for us, it's whenever they come in. It's a little bit different in that they're resource definition rather than true exploration. But again, we've put out 2 sets of results at the moment. We're obviously doing more drilling now, and as it comes to hand, we'll generally get it out. Certainly, we'll keep the market up to date with what we're doing, and I guess it comes down to how quickly we get the drilling done and the assays done. But as I said earlier, it will be on a pretty regular basis between now and September.
Okay, thank you for that. I'll move to the next question. So, how are you positioned to take advantage of the copper price in the near and the long term?
I guess for us, and you look at how our people don't like the word anymore, gold equivalency. People don't like seeing that term because obviously the prices of the two metals change so often. But at the end of the day, the copper is adding running the copper price is adding enormous value to what we're doing at Rover 1. What it does is it allows you to open up other areas of your deposit simply because there's more copper there, whereas it might not have been economic 12 months ago at a price that's 40% of what the current price is. I guess, and the other thing we've just discussed, we've got some massive copper targets here, primarily 108, which is, if you like, a dripping roast as far as exploration goes for a really, really large copper deposit. So from our point of view, I guess the strength of what Castile floated on was the large amount of gold we have in resource, but I think hopefully the market is now waking up to the fact that it's called an IOCG for a reason, iron oxide copper gold for a reason.
And it's good to see you have both of those in your portfolio, and you can see, obviously you can't predict the future prices of gold or copper, but for you to be able to sort of have both and be working with both positions yourself well for the long-term state of the company. Moving to the next question, what are the major hurdles that you'll face as a company in the next 12 months?
The thing for us is, I guess once we start getting to that, I guess the pre-development stage, you're looking at staffing up and getting people from the area employed. And we're starting to work on that now with some of our sporting programs in the primary schools and the high schools and working through to the training programs so that, I guess, Castile becomes a very well-known brand in the local area. And obviously we're trying to work up our reputation once we get into that sort of development phase, that we're a good contributor to, from an ESG point of view, up in the Northern Territory. And working at the local level now for that, you know, as we, because we've only been going for about a year, not even a year and a half yet, but we want to do slow and steady at the local level and build from there. As far as relations go in the Northern Territory, we had a full cross-agency meeting in Darwin last week. We continue, and I keep saying there's an announcement. The engagement with Northern Territory government at all levels has been sensational. Could not be happier. They've released their tertiary report in April this year, so they're saying they want 5 new mines in 5 years, and obviously we're right in the sweet spot for them with the size and capability that we've got.
That's great. And there was a question emailed into me in regards to the relationship you had with the Northern Territory. So it's good to see, obviously, the government side of things, but also building relationships with the community is great. And then you've just touched on it just now in regards to the ESG. This is also emailed into me. What sort of initiatives do you guys have in terms of reducing your carbon footprint?
The potential here is this for this mine, and my chairman's very big on this, and the potential is there for it to be the first carbon neutral mine in the world. When 120 kilometres away is they're going to build the Sun Cable solar farm, and that simply may be a case of either us just simply getting a cable run down from the farm, or us being, if you like, an experimental or run a trial case of us having our own solar field and being connected into our plant, only run the crushers during the day. We can run electric trucks, we can run remote electric trucks, powering up can all be solar. Obviously, we can use 12 volt down the mine to light the mine, getting rid of all the diesel particles from down the decline. So there are things that we're doing. The footprint of the processing plant can be, completely removable, in that it can be assembled and trial assembled in China, brought out here and constructed like a Meccano set. But the important thing is it can then be removed at the end of our processing life, which we hope will be long. But there are things like that. Also, and I talked about it earlier, the magnetite product from our waste, again, reduces our tailings dam, reduces our waste, and is making use of everything we bring up out of the ground. So the opportunity is there, the technology is there for us to engineer this into our model, and, as I say, make this one of the most environmentally sound mines in the world, and certainly a world leader in that regard. The Northern Territory government and the CLC are very interested and on board in assisting with that, and we hope to see that develop.
No, that's definitely good to hear as well. And it's obviously clear that, with that Explorer 108 project, should you be pulling that copper out of the ground, the use case for that in terms of moving an economy to a more ESG focus with electric batteries and charging and all those things there, you can have that impact moving forward as well. So there's two sides of the coin. And then just moving to a question from the floor today. So based on the Mount Isa project and the Explorer 108 project, other than the graphic that you've shown, what is it that you think the similarities are between the two? And do you think it's a bit audacious to compare the pair?
Absolutely, it's audacious. But when you consider that they are in exactly the time, if you like, time frame or stratigraphic comparisons are pretty much spot on. It's, from memory, it's about 1.68 thousand million years since they were formed, MA. The geological, situation is the same. The host rock are the same. The lead zinc component above, and what we're expecting is with the copper below. That's exactly how Mount Isa came about, and that's why we use Mount Isa as the analogue. We're very pleased with how similar the setting is. But yes, it is audacious to call it like Mount Isa. But when you look at what Mount Isa was and what Mount Isa did, and compare it to the size, if you like, of what we're looking at, and again, exactly the same minerals, lead, zinc, sitting above a large copper deposit. We're hoping it's there. We hope to find it. It's exploration. If we don't find it, it was especially audacious. But if we do find it, I guess we had a basis for our being audacious about it. But I've got no problems comparing it to Mount Isa in if you like, in terms of the setting and all the properties that it has.
No, and that's a well-answered question. I think as a company, it's good to be pushing for what you've seen before. There's no reason why you shouldn't be looking at a previous project with obviously very high upside. And if you do hit the Mount Isa project, well then, you've told everyone that it's similar, and you've given the opportunity to invest before it's happened. And if you don't, well, that's the risk of exploring. So it's good to have a light comparison. So from my perspective, I think it was a good comparison. And looking at a company, it's good to see that project in place. Just moving to the next question now. So this question, it's looking at the current projects you have in exploration, and it's asking effectively throughout the lifetime of the mine, are there other projects in the area that you're working in that you'll look to explore as well, or are you just going to work with the current projects you have now?
Yeah, so we've got about that tenement you saw in the lime green on the map there is about 1,000 square kilometres. And we showed if you like, the broad geophysical map there, which we had up on screen as well. I can't remember the slide number. I think it's around 8 or 9. But that shows you the geophysical anomalies that have been picked up in both the magnetics and the gravity overlaid, and that's how we find these IOCG targets. There are numerous targets in there to work with. And when you think that we'll be setting up with a view to our development being a processing hub, not just a processing facility for Rover 1. And if we can add in the best prospects we have, which are, if you like, Rover 3 and 142 with regard to success, then again, they just add years and they will add size to the project. Obviously, as I talked about, the modules that we can add on will have a big upfront crushing capacity and we'll have a smaller back end to suit Rover 1. So it's no problem with success at either Rover 3 or 142. The pure quantum will change if we have success at 108 and find this primary copper source. But again, that can be processed through our back end as a start. But you can see if we have success there, we'll need to make some serious additions to that plan.
Okay. We're just coming to the end of our time here today. We might just wrap it up with one final question. So for you, Mark, what excites you most about Castile Resources, moving forward?
Well, I think the opportunity, and we see a lot of projects up in the Northern Territory, but I think the opportunity to get going what we're talking about, which is not a massive project, it's a boutique, highly optimized, highly profitable mine as a starting point, and then we can use it to branch out to these other exploration plays. Obviously, the quantum changer is 108, and I'm excited about getting into that. But the other thing is, I guess, making our way through this pre-feasibility study and the encouragement we're getting from the Northern Territory and the CLC has been fantastic. But if I had to choose one thing, it would be, I guess I'm really excited if something happens at 108, and that's exploration. But that is truly what we're looking for, buried treasure here. So we'll see how we go.
Okay, no, thank you for your time today, Mark, and thank you for our viewers for tuning in. We look forward to answering any more questions you might have. Feel free to email me or one of the team members here at Fortem. Any questions we can't answer, we'll pass them back to Mark, and we'll get some answers for you. Mark, thank you for joining us today and telling us more about Castile. We look forward to following your journey and seeing where you guys end up.
Great. Thanks for the opportunity, Aidan, and thanks for everyone for listening in.
Okay. Thank you, everyone, and thanks for another webinar here presented by Jackson Securities.